Hey guys, I'm going to do a market review for Wednesday, November 22nd. I said I wasn't going to trade today because I didn't think the price action would be that probable the day before a holiday. I did end up watching this open and I was half right. So I think the price action today was amazing between 9:30 and really 9:30 and 10. It was an amazing open. I'd say it really stopped being anything worth looking at 10:18. I think after 10:18, what we really did is we went into time distortion, and it just kind of moved sideways a little bit. Again, there are some people out there that are going to say you can trade this, and what they're really doing is they're going down to like a sub 1 minute chart, and you know, looking at structure there. In my personal opinion, I think you don't really need the sub 1 minute chart. What everything you need in trading to be successful can be found above that. And if you haven't really found success mastering the 1 minute and above, there's no need to go sub 1 minute. Um, but I'm going to talk about, I think this first 30 minutes of today's open was valuable enough to make a whole video about just the first 30 minutes. I'm not going to talk about after 10. I don't think the price action after 10, if you look here on this 5 minute, um, just really went sideways. So, but this open, this open. So this is ES. The same thing happened on NASDAQ. So what I'm saying pretty much goes for both. But I want to draw your attention to this daily chart. So what happened today at the open was we just ran this Monday high and probably set the high for the week. But we came above this Monday high. On Monday, we came above these highs. Remember, we were targeting these highs, but we did another run above it. And I think this run was purely just taking out Monday's buy side right here. As you can see, we opened at 9:30 and went straight up, and then we shifted lower, and it was a V shape. Now, this can be difficult. I think Monday had a very similar open, and Monday, I just made a video talking about trading psychology, and I kind of explained how I got emotional trading Monday. But Monday had a similar open, and on Monday, if you thought it was going to be a V shape like this, you would have been wrong because the drawback was just a pullback to go higher. So this is when trading becomes difficult. You have two very similar scenarios, but they do two different things. That's why it's really important to have a well built out model. You'll hear me say a lot of the times that I like to wait for 5 minute shift in structures, or I like to wait for 5 minute bodies to close, because you can have this 1 minute market structure shift, but I like things to happen on 5 minute. Um, this wasn't something that I would have entered probably. But look down here, let me get this out of the way. Right here, you had something that would have probably been something I would have entered on and could have been our silver bullet. So open happened, we ran up, swept the Monday liquidity and these highs. Go down 15 minute. We went up, had this little market structure shift, retrace. That's technically, 2022 model, and then we had this drop. Now, why I think this is the silver bullet and this would have constituted a fair entry was because you had now swept a significant level of buy side. You swept a daily high and then aggressively crashed lower, and now you broke you had a significant market structure shift right here. That was a 5 minute shift. You're coming below the opening price. If we open up the regular trading hours and take a look at the opening range gap, you can see when we opened, we immediately ran from the opening range gap, and then we came crashing through it. So we had this more significant market structure shift on the 5-minute, retraced up into this fair value gap, and then delivered to the middle, the consequent encroachment of this opening range gap. If you would have entered there, you could have easily got 5 handles, and let's see, you would have got your 5 handles. But I say all that to say, this, we took buy side, we took sell side, this is also sell side right here. And we took sell side, continued below it, came up, wick. Notice how these bodies didn't close below this body. We had the wick below it just to get people think we're going short again, but the bodies didn't close lower than this swing low. Then we retraced higher. I think it would have been fair for someone to enter here and call that the silver bullet. I would rather call this the silver bullet just because, it is in a price swing that was targeting sell side after taking buy side. Whereas this, you already took buy side, you took sell side, and then you have this market structure shift. What liquidity are you targeting? Are you going to target this high? You never got that. You never got that high. So, but you would have got your 5 handles. I think so. That's up to interpretation. But the main point of this video, I think the main takeaway is notice how price moved towards liquidity. I think this video is a great job at highlighting, or this market structure right here does a great job at highlighting that liquidity and draw on liquidity should be at the forefront of your brain and trading for smart money concepts, because when price is moving towards liquidity with intention, it is gonna move nicely, and it's gonna be most likely low resistance. Notice how these moves are very quick, and they delivered. We came up into this silver bullet. See this? See the bodies? Let me bring to the front. The bodies stopped perfectly at consequent encroachment here, and then dropped lower. You can see the bodies here at this 2022 model didn't even close inside of that. So when price is in low resistance conditions, this is how nicely it moves. And this is another example why, I think you'll see me say I'm just not going to trade certain days. And, I feel like in this channel we have been caught trading in high resistance liquidity runs a lot lately. But I think it's important to highlight when there is low resistance and how seamless and quick these concepts play out. And notice how after we swept this significant level of buy side, this daily level, came down, swept some of this London sell side, but specifically dug into the opening range gap, came down to 50% of it, the consequent encroachment. See how the bodies stop at consequent encroachment? And then it just kind of enters into time distortion and starts marking time sideways for the rest of the day. So that is one of the examples why you'll see me, if I might call out some liquidity and price might get there and we never ended up entering a trade, and then I'll say I don't want to trade it. I'm not doing anything because we already reached our target. I'll say I don't know what's going to happen next because we already took the obvious level of liquidity. So I think this market structure really highlights how important it is and how awesome it is when there's obvious levels of liquidity that this market is targeting. So how would you have known this? Well, if you I suggest you go and just study ICT in his YouTube channel. Um, Previous days, daily highs, very significant level of liquidity. So the fact that we came up, took that, broke aggressively lower below this opening price, came up, delivered consequent encroachment at 10 o'clock, silver bullet, delivered 5 handles, and also was taking sell side, these lows, and these lows of London. So I didn't mark those lows out originally because it's like there's nothing really distinguishing like why this low and not that low. I would argue that that was just enough sell side and it happened to be at the consequent encroachment of the opening range gap. So that was enough. The market sucked liquidity and then entered into time distortion. And yeah, but again, biggest takeaway from this video is look how aggressively price runs towards obvious levels of liquidity, and then notice what happens after we already run liquidity. And yeah, so like timing is everything. We ran the liquidity. Sorry if I sound like a broken record. I'm just trying to nail it into your head. After we cleared the buy side and the sell side the day before a holiday, it just enters into time distortion. So I suggest you not trade Thursday. I don't even know if you can trade tomorrow. I think it's like the market's only open half day, but don't trade tomorrow. Don't trade Friday. I'm excited for next week, hoping to close out the month strong, and enjoy your holidays if you are celebrating holidays.